Today I'm going to be going over the 3 stocks to buy during the current dip in the market, because if you have paid any attention to the stock market lately, you probably noticed there's been a bit of a correction over the last couple weeks and quite a few companies have lost a lot of value. And so I thought it'd be a good time just to bring up 3 specific companies that might be a good time to buy right now. And just remember that I'm personally not a financial advisor, so take this advice for entertainment purposes only, and always be aware that there is risk with investing, no matter how good of an investment you think it is. So if you happen to do any research on the giant retailers like Target, Walmart, or even Costco, you'll notice that the value of those companies has gone down quite a bit over about the last 6 months. And so the first stock that I want to talk about potentially buying right now happens to be Costco, because the last time they were at their current price was back in early July. And so now is potentially a really good time to look into buying them, because it is quite a bit lower than it's been in obviously 8 months. Now, obviously, if Costco continues to go down, then the buying opportunity is still going to be there, because in my opinion, I feel like they're a solid company and they're not going anywhere. But for them to lose 8 months of gains in only the last few months, that is a good buying opportunity right now, because obviously we're catching up back to July. Right now, their PE ratio is about 32, which is a little bit high, but if you compare it to the other big retailers in the same industry, their PE ratios are also about the same. So I'm not really too concerned about that. And also their forward PE ratio is looking to be about 28. So that's a good sign that the PE ratio is going to go lower in the future, and hopefully it does continue to go that way. Costco also pays out a small dividend, and their current dividend yield happens to be 0.86%. So honestly, it's not that great, but their payout ratio is only 28%. So that shows us that their dividend is probably not going to go anywhere, no matter what happens to the economy. Now, obviously, we're not certain of the future, but it does look like their dividend probably won't be going anywhere. Now, the next stock on my list goes to Johnson & Johnson, and if you're not familiar with them, they're basically a household company that own a bunch of different products that you buy at the grocery store all the time. Like, for instance, toothpaste, different types of medicine, laundry detergents. They own a bunch of different brands that we buy all the time. And so basically, if there ever is a recession, they're pretty much recession proof, because no matter what, we're still going to need those supplies in our everyday lives, no matter what's happening in the economy. Now, currently their share price is about $155, and the last time we were at that price was in early January. So we have lost this year's gains as far as this little dip goes, but it is a good time to buy, because the biggest thing right now is that they've developed a one-shot vaccine that's been rolling out, and hopefully that can help things get back to normal in the near future. So currently their PE ratio is about 28, so they're still a little bit overvalued. But when you're looking at their forward PE ratio, we're actually looking at it being projected at about 15. So this is really exciting, because that's a huge gap going from 28 all the way down to 15 in the near future. But just remember that the forward PE ratio is projected, because none of us can predict the future. So maybe it'll go to 15 and that'd be awesome, but maybe it won't. Johnson & Johnson also pays out a really good dividend, and the dividend yield happens to be 2.59% right now. So as far as the industry goes and how much growth they typically see, this is a really good dividend, and it's extremely sustainable, considering that they've always been paying out that dividend. Now, right now, the payout ratio happens to be 78%, so that is a little bit high, but I'm not really concerned that they're going to be getting rid of their dividends, because as far as history goes, they've been very consistent with their dividend payouts. Now, the last stock on my list is going to go to Facebook, because even if you don't use their platform, you probably use Instagram or Messenger, or you might use Oculus, because in the gaming industry, that's growing tremendously. And if you guys have ever paid attention to how the ads work on Facebook or Instagram, you've probably noticed that they're extremely advanced, because you could essentially look up something on your desktop on Google, and the next thing you know, you're being served ads on your phone just while you're going through the Facebook feed. So as far as targeting ads go, they're making a ton of money from that. And it's also extremely targeted, meaning they're getting a really good ROI on those advertisements. So this is a very big business to be in as far as a moneymaker, because advertising is huge, especially when you can target those ads. So if you look at the 1-year graph here on Facebook, you can see that they've been fairly flat over the last 6 months. And that's why I'm interested right now, because it's not necessarily a huge dip. It's just not a lot of gains over the last 6 months. So now might be a good time to buy into them. Their current PE ratio is sitting at 25, which in my opinion, I think is pretty good for the social media industry. And then you've got a forward PE looking at about 19. So we are projected to be better in the future, and that's always a good sign. Facebook currently doesn't pay out a dividend, but maybe in the future you could see something like that. But right now they're in the growth period. And honestly, even if you look at their 52-week range, you can see that they're up 42%, and that's including the 6 months that have been fairly flat. So that's a really good return considering not much has been happening for half the year. So that's something to consider as well. And even though Facebook is fairly new when it comes to the stock market, I feel like this is the type of company that's going to be around for a very long time, because as far as social media is concerned, I feel like it's only growing and it's not going to go anywhere, at least in the near future. So if you want to do some research on these companies, definitely check out Costco, Johnson & Johnson, and Facebook right now, because potentially these are 3 really good buys, and I personally think you can definitely hold them for the long term as well. Now, if you are new to investing, I have an affiliate link for Robinhood in the description below, where they'll actually give you a free stock just for signing up. So go ahead and check them out if you have an interest. Also, if you just found this channel, I'm Jason with Honest Finance, and I make a lot of videos on different topics that'll give your life and your finances more value. So feel free to subscribe to this channel if you have an interest in this type of content. But thank you for watching. Have a great day.